Hello everyone, good afternoon. Today is July 8th, Monday. This is Thor market review, daily market review. So today, as expected, price was rather choppy. It was consolidating. Regardless of the consolidation, it offered lower time frame market making models, scalps basically. But overall, it was not the ideal trading day. So let's take a look at what happened overall during the New York session, and let's find out. So here, before New York Open, we had sell side delivery right here. Didn't engage with the actual 1 minute market maker sell model, thus it rallied at open. There was that was bullish SMT. Let me delete these actually. There's bullish SMT present. Market rallied, took the buy side at New York Open, and then delivered sell side here. This is the last manipulation. That's also sell side. It went for that low, which was mentioned on the stream today. But what was more interesting for me was basically the rally afterwards. It was a V-shaped reversal basically. So here's the dealing range EQ. It was a V-shaped reversal basically, but typical seek and destroy. Here, as you can see, market was rating buy side, then was going for sell side, then buy side again. So it's basically, as Mr. Faris calls megaphone, what I call it, broadening wedge or broadening channel or whatever it's called. I'm not sure which one it is, but here how it looks like. Basically, yeah. I'll zoom out a little bit for you guys here. Broadening wedge, broadening channel. It's basically getting wider and wider and wider, making more damage as it gets wider. Besides that, these conditions, I already taught you how to avoid it and how to anticipate it. Here, as you can see, the moment you see market going from sell side to buy side or vice versa, you just stop looking at the charts. That's how it is, Just stop looking at the charts, don't trade it basically. Here, as you can see, it's going from sell side to buy side to sell side. So very choppy. But let's get in more detail. Let's dive deep a little further so we can anticipate and see what happened actually on the 1 minute time frame during the session. Because there were some moves like this move, this rally it could have been a trade. This rally also could have been a trade. The end of day pump could have also been a trade. So let's see what happened. I'm gonna pull up ES. So we have all these lows, this one right here, and the SMT low. I'm gonna keep that SMT low, and I'm gonna take the dealing range from that low all the way to the New York Open high. As you guys can see, it was trading into in the discount area. Okay, after taking the buy side. The delivery was choppy, so I'm not gonna walk it candle by candle, but after buy side delivery, market broke down, formed a bearish SMT here, I believe. Let me see, I'm not sure where it formed. Yes, here. Bearish SMT. The objective of that bearish SMT is to take out or knock out the lows, which it did. Then it reversed basically and went for the highs, seek and destroy. And then choppy price action here, formed a trap. The trap fair value gap sent price lower one more time. Now, what interests me the most is this is another SMT divergence, which means, it's not a 1 minute SMT, but it was rather on the 5 minute. I'll show you. Where is it? Here. It's not even on the 5-minute actually. That's not a swing high. I thought it was 5, but it's not a 5-minute. But we had one more time here at the trap fair value gap. That's another short. The objective of that SMT is to deliver the sell side. But I mean, honestly, like the only way to anticipate price coming up all the way here, like as a pullback, you look at the candle itself. Like there's no manipulation here. If there's no manipulation there, the likelihood of the fair value gap getting invalidated is very, very high. Okay, I want you guys to understand that it's very, very high. Now, if it gets violated, it doesn't necessarily mean the bias has changed. It just means the market moved all the way up here just to form PO3 on a lower time frame, basically, because this candle doesn't have a manipulation, doesn't have a wick. It just opened and dumped, so it doesn't offer buy side. So price goes all the way up there to offer buy side, and at that time it formed an SMT divergence. That's a good short. So instead of shorting in this fair value gap, you can use this manipulation. This is also deep. It's called deep pullback. If I take a look at the previous range, which is this one right here, it's premium, basically the premium portion of that fair value gap. Okay, the reason I'm looking at this one is because this is the buy side, this is the sell side, not this one. That's why I'm looking at that one. So it delivered one more time. Sell side was gone. It also tagged weekly open. The more the purple line is weekly open. It formed divergence here with equal lows being on ES. This is the bullish divergence this time with equals. As you guys know, I consider equals also as a divergence. And then market rally, basically buy model. In this buy model, we can read this one because this one is clean. So here, divergence, displacement, first fair value gap plus breaker. You can consider this as a unicorn. Also, market IFED below a down close candle that is showing strength. Displacement more, knocked out the first high, didn't stop, knocked out the second one, and eventually the third one, knocked out all the buy sides. I think this was the cleanest delivery of today's session. I would say anything afterwards, you could trade it, but anything afterwards was not as clean besides the end of day pump, but I'll get there. But in between of this rally and the 11 o'clock rally, it's just noise. Not noise, but like I would say time decay. So IFED below down close candle, that indicates strength. Now market flipped the, hold on, let me just annotate the correct dealing range because this is SMT now. It offered discount one more time here, which is basically order block mean threshold also, and rallied. So that's the last opportunity for basically us to go in if you want to go in. If you miss this entry here or the OB open, you have to let it go. And here, because it took the buy side all the way up here, it took the buy side, it formed a new dealing range. Oops, that's not what I did. Formed a new dealing range. Initially, this was the high. Didn't deliver discount. Then it rallied one more time. Still no delivery for discount. Then it rallied again, no delivery for discount. But here's the thing. Let me go on ES. So here is that rally on ES. As you can see, while while Nasdaq was rallying, ES was not doing anything at all. So while Nasdaq was consolidating, basically going range bound, ES was kind of dumping, right? So the market was not in sync. Here also it formed a bearish divergence, if I'm not mistaken, in between these highs maybe. So it formed a bearish divergence up there, but you know, doesn't mean much. It just sold off, broke the range EQ, formed premium fair value gap here. That's my main interest. Premium fair value gap. Sell side being SMT low, so it should go down there. Sell side, because market now is in sell model. But what happened here was it instead of using the premium fair value gap to go towards the sell side, it accumulated. Meaning, once that accumulation was completed, so here the candle violated the premium fair value gap. Now we have a higher time frame trap basically. So this becomes trap fair value gap, accumulation below. So all this PD array below that fair value gap, all of it until the violation here. Now we have trapped shorts. Oops. Which means that algorithmically speaking, the market will not offer those trapped positions to break even their positions basically, or it's not going to let those positions to close their positions for a fair price. What is a fair price? Fair price is basically as close as break even. So, which means trapped shorts. Trapped shorts. Which means it should not, once the fair value gap, the accumulation fair value gap gets violated, the low of the accumulation is not going to be traded into. Now it's a safe low, because if market wicks down there, what it means is the trap traders or the trap positions can now mitigate their losses for a fair price. Okay, and market should not allow that. So violation, retest of the range EQ, rally. Now you can do a couple things here. There's also, I think, SMT divergence, if I'm not mistaken. I might be wrong. Right there, yes. So it also formed a bullish SMT divergence right here, which indicates what? It indicates market turned from bearish or market maker sell model, switch to buy model. Now, once that SMT divergence occurs, that swing low is confirmed. Now, market is in buy model. Algorithmically speaking, where is it going to? It's going for the buy side. However, it failed here. Why did it fail? Now, this is the hardest part of trading. This the understanding of why it failed here lays down in how much you pay attention to detail. Now here, if you look at these candles, one second guys. Sorry guys. So you have to pay attention to detail. Here, if you look at these candles, there's a gap. That's basically a volume balance. Okay, so price moved all the way up there to basically touch the gap or rebalance that gap, not to engage with the buy side. So this is the ugly part of this consolidation or low probability days. You think, oh, it's going to go for that buy side, you may be like late long in this fair value gap, but you miss that detail and you get stopped. Okay, that's very important. You can also see these things on the higher time. So if I go on the, I don't know, like 5 minute, because time is fractured, you're going to see the same thing, same gap right here. On 15 minutes, same gap right here. On 60 minute or 1 hour, same gap right there. You see? So it doesn't have to be on, you don't have to be looking at specifically on the 1 minute, but if you see that on the 1 minute, it's going to be present on the higher time frame as well. Okay, so it came all the way up to that volume balance and broke down, so the bullish PDRA got violated here. It doesn't mean much though, that violation, it doesn't mean a lot to me personally, but the second displacement means a lot, because in the first place it didn't move that much, but the second one it moves a lot more, with I think 3 drives. So here, the first high, second high, and the third one. After the third one, it basically dumped and came all the way down to the range equilibrium. Now once that range equilibrium delivered, it made another rally. It pulled back deeper. Why did it pull back? This is another, I mean, it could have been a trade for some of you as a scalp. But if you're in this trade, in this long, if you want to long this, you should not be longing or holding your entire position all the way up to the buy side. Why? The only reason market delivered buy side here is because of this. There is no manipulation on that candle. And what's that candle? It is 2 o'clock open. So that's the hourly open. Like, how many times have you seen an hourly candle without no wicks? Very rare. Very, very rare. Only on trending days, not on range bound days. So market pulled back all the way up there. Rebalanced, basically delivered buy side, then sell side. Now it's balanced and delivered sell side. Here it should have came all the way down to the trap shorts, because that's now the sell side, basically the market maker sell model objective. It failed to engage with that low though. It left equal lows, which is very suspicious. I mean, not for today. Apparently it didn't take out that low, but for tomorrow or the following, for the rest of the week, it'll be very suspicious, especially it's because it's on NASDAQ. I doubt it'll be left like that, but it could be also because it's CPI. But also I wouldn't be surprised if, if market range bounce and then wicks down there at some point this week. Here, V-shape, rejection. Market did not form a divergence until here. Okay, like look at the lows. We have a V-shape. After a V-shape, what do we wait for? We don't long any of these bullish PDRs. Do not do that, guys. Do not do that. I repeat, don't do it. Some days, on trending days, yes, it will work. Okay, but even on trending days, you're gonna be seeing that SMT divergence. Okay. Now on range bound days, look how much it just retraced. If you were long here, you would have definitely been stopped. Even if you longed here, you would have been stopped as well. Okay, so don't do that. Wait for that SMT divergence, bullish SMT divergence before longing. Okay, after V-shapes, V-shape projections or sharp turns or whatever you name it. I don't care whatever you name it. So look at the lows. No SMT. It keeps printing new lows. I think there is a bearish SMT in fact here. New lows, and then it starts accumulating. Okay, in that accumulation, it forms a divergence. On ES, it's equals, but it's still a divergence. Why? Because NASDAQ is making lower low, and ES is not making a lower low. It's still a divergence. Now we have an accumulation below CB. Once it gets inverted, now this is a trap fair value gap, as I call it. I don't use the name of inversion fair value gap, but it's also the same thing with the same context. Like this inversion means nothing to me. Okay, this inversion fair value gap here, that means absolutely nothing. Here, this one means a lot because there's context behind it. What's the context? Market accumulated below that CB. Okay, very, very important. Here, now this accumulation becomes what? Becomes trapped shorts with a bullish S&T divergence. Basically smart money reversal. Market inverted the fair value gap, formed the trap fair value gap, retest. That's a long, rallied. Here, IFED below a down close candle, indicating strength, and delivered what? Knocked out basically all the highs afterwards. This happened in the last 10 minutes of this market. I took this long at 347 to hedge my loss today, so I basically closed my day slightly in profit, not too much, like $100 or so, and targeted here. Didn't take it all the way up there though. I probably, I don't remember, but like basically like I was down minus 20 at 270, close to that, you know, not sure, like $150, something like that. So I took this trade all the way up here. But the context is backing up. We have the smart SMT, trap, IFED, buy side. And that buy side was very important for me because I mentioned one thing on ES, which was never delivered until the last 10 minutes. So first of all, equal highs, horizontal consolidation, and the SMT divergence is right here. I think that was an SMT. Let me check. Let me double check. I don't want to mislead anybody. Yes. Here's the bearish SMT. And this is the level I mentioned on ES. I think this is what I said. I think ES is on sell buy model, which was wrong. I mean, in terms of narrative, I was wrong about that. But this is what I said. This is the market maker buy model objective. I mean, equal highs, high probability the objective, but my main interest is, as always, SMT divergences. So this is the M1 market maker buy model objective on ES. So once it formed that bullish divergence after taking sell side, I was eyeing this level, which got taken out just now during Asia. So until then, Nasdaq was also running here. Where is the area? Here, as you can see, it just rallied and followed ES. But basically, I would say, like, if I wanted to trade today, or if I was watching the market, I probably would have been only interested in this leg and the last 10 minutes. Other than that, I wouldn't have any interest in the market, which is like this is the trade I took today. The rally, just to hedge my loss, not to make money, but just to hedge the loss and close the day at break even, basically. But yeah, pretty choppy day. I don't see a lot of like one setup for life kind of rallies today. Didn't happen that much. The only thing I could say, I'm not sure, but this could be, let me see. Let me see. Yes. Comes down to the range EQ, bodies respecting delivered buy side. This is one setup for life, and I think this was the only one setup for life setup basically for today. Maybe also this one from the sell side all the way to the buy side. No, this one didn't come. Maybe second time it did. Yep, it touches there. So this one, and this one is obviously more cleaner. So the moral of the story is basically, guys, what you guys can do, which is basically what I did today. Although I didn't alert it because I don't like to alert the last 10 minutes, because I don't think anyone can able to manage their risk properly and execute fast enough. Because also, like, the alerts will be slightly laggy. Like, I'll be entering here, then maybe 1 minute later the Discord will send the alert, and then you guys will see it maybe 3 minutes after the actual alert. But here's what I did, and here's the moral of the story for today. On days like this, you have to stop watching the price at some point. Like, give yourself 1 hour. Okay, at 11 o'clock, if it's choppy, just let it go. Come back in the afternoon session. If it's still choppy, let it go and come back at 3:45 and try to find something on the last 10 minutes. Because if it's consolidating the whole day, the likelihood of getting a volatility on the last 10 minutes or the 15 minutes is very, very likely. And that's usually going to be at an OTE level or a deep discount level. Okay, or deep pullback level. So here, for example, we have the last leg, range EQ, deep pullback, bullish SMT and rally. So deep level, deep pullback. We have this range, that range, because this took the sell side, this took the buy side. That range is OTE, also gives this level. Okay, It's the same thing, different perspective, but it's the same thing. I don't like to use OTE. That's why I'm looking at the previous ranges for deep pullbacks or OTE levels. But again, the moral of the story, if market is choppy the whole day, if it doesn't move that much, come back at 330, 345 and try to take advantage of the last 10 minutes, 15 minutes volatility. Okay, instead of getting chopped here. Like I mean, the only thing I don't want to see from anybody in this group is trading like this, guys. I don't want to see this kind of stuff, guys. I don't want to, because this is gonna burn your account. Okay, if you end up, oops, I don't want that. If you end up doing this during the consolidation, guys, I can guarantee you with one consolidation day, you're gonna be wiped out from the market. Okay, this is not what I want to see. Try it once, like I did in the morning. If it doesn't hit, let it go. Come back tomorrow or a PM session. Okay, the smart thing to do would be coming back tomorrow. But if you still want to trade that much, you can try to get, like today I wasn't tilted, but like I didn't want to close red because I didn't want to trade technically today, but I did it for some reason. I don't know what was I thinking. So I was like, okay, I gotta hedge this, and I'm gonna hedge it, because it's just like 12 points anyways. I can make 12 points with just maybe like, if I just long a bullish S&G divergence, I'll make 12 points in like 2 minutes. So basically that's what I did. But the thing I'm saying is, on a regular basis or in general, okay, this is the price action what we're gonna have regardless of how market is trending. Okay, so on a given week, we're going to be seeing this kind of price action at least 2 times or 3 times. Okay, so if you're trading, when you turn on the executions on TradingView or whatever broker you're using, if it looks like this, you're going to be wiped out, like literally on the first consolidation day, if not on the second one. So please keep that in mind, and please use the accountability channel. I created that channel just for you guys because I've seen some of you are still dealing with over trading, which is understandable. I get it, but I feel like the main reason of that channel is I thought maybe like if you guys feel obliged to send your charts at the end of the session in that channel, you would not be trading or over trading, and your charts will not be looking like this, because maybe you might feel ashamed to post it over there when it's like this. So I thought like maybe it could prevent, or it could help you to avoid overtrading. I hope it works though. I don't know. I'm just trying to and also just to remember like this is a safe haven for you guys. Okay, safe place for you. No one's gonna judge you. Even if your chart looks like this and send it over there, I will not get mad at you or whatever. I'm not going to judge you. Instead, I might DM you and I might try to talk about some stuff with you just so you can get better and overcome overtrading. Because if you're not profitable, I can guarantee you it's not because you don't know technical analysis. It is because your chart's looking like this. Okay. So on that note, guys, I hope you guys find this insightful. Not much to talk about, but I mean I talked about what I saw. So yeah, have a great day, have a great night, take a good rest. We'll back at it tomorrow, you guys. I'll talk to you tomorrow in the morning, 9:15 Eastern time. I'm going to be live streaming again. Have a great day.